You mentioned in that in your explanation there, ROP or return on premium, which is interesting. I think if people just think that there's term or whole, they don't understand this whole other flavor of unique products like the Nomad or this ROP. So can you explain a little bit more about exactly what that is?
Yeah, ROP term really hit the market right around 2000, 2001. We were actually instrumental in helping it come to market. We worked with one carrier and we said, look, if we could come up with a way to give people their money back at the end of 30 years, we might remove some of the objections to buying term life insurance. Because term life insurance, the big objection is, I don't think I'm going to die young, so this is going to be a waste of money. So with the way ROP works, it's more term-like pricing. Okay, so it's nowhere near the price of universal life or whole life. It's term-like pricing, which means it's cheap, translation, cheap. And then at the end of 30 years, if you haven't died, you just get a refund of 100% of the premiums you paid, 100% income tax free. So hypothetically, let's say you paid $1,000 a year. Let's say you would have bought a 30-year term policy for $500 a year, and now you buy an ROP term policy for $1,000 a year, which is way less than the $3,000 or $4,000 it would cost for permanent insurance. You pay $1,000 a year. At the end of 30 years, to me, it's like putting money in a piggy bank every month. You put money in a piggy bank, $1,000 a year, that's roughly $80 a month. $80 a month, you put it in there. If you die, we give you the death benefit, which could be $500,000 or $1 million or whatever it is. We'll just take whatever's in the piggy bank. And if you don't die, whatever's in the piggy bank at the end of 30 years is just your money. You just take it and crack it open and have a party. Now, what will $30,000, if that's what you're paying for the ROP, what will $30,000 buy at the end of 30 years? With inflation and everything else, I don't know. Will it buy a new Camry? I don't know. Probably not. Will it buy a large pizza? Probably. At the end of the day, it's better than a sharp stick in the eye. It is 100% refund. And there are those that will be skeptical or cynical and say, well, what about the interest on that money? That's how the insurance company's making money. And that's right. They are going to invest the money. But how are you investing your money? Are you making a huge amount of interest on your money? Because as we talked about before, interest is hard to come by these days. And it's been low for a prolonged period of time. I can't remember. It was sometime in the 90s when banks were still paying interest on bank accounts. And so if you're not earning anything on your money anyway, what's so bad about putting money in a piggy bank? We teach our children to put money in a piggy bank. Why do we do that? Well, because it's fun and it's a good idea to actually save money. If I told you that you had to put $5 a day in a piggy bank every day for the rest of your life, and you're not going to get any interest on it, but in 30 years you can open it up, I don't think you'd be stomping your feet and pounding your hand on the desk saying, boy, that's a really stupid idea, I don't want to do that. It'd probably be a good idea. I'd probably have a little more money if I forced myself to put $5 a day in a piggy bank. Not such a horrible thing, but at the meantime, by doing that, you create hundreds of thousands or even millions of dollars of life insurance that's there, and they'll just take whatever's in the piggy bank. If you die in 2 months, all they get is $160, and you get $500,000 or $1 million, depending on what that ROP term premium is, and it varies depending on your age. Typically, ROP plans are available all the way through age 50, which is actually really nice. So